And maybe I'll start with 2024 because we just unpacked that year. So we were pretty happy that we grew the business by 8%. We achieved our highest ever revenue at 400 billion SEK, and we achieved our highest ever profit at 27 billion SEK. And of course, we were driving, much more EVs. EVs came in at 23%, which was up from 20% the previous year. All of that together, I think is a reasonable performance given the amount of turbulence that we saw even in 24. In 25, I think we're going to see that turbulence increase. And the way I frame it up is I think we're going to see turbulence in terms of trade tariffs, maybe some geopolitics, and we're going to see some policy changes. I also think we're going to see the transition to EV slow down a little bit, which is okay for Volvo Cars because we have mild hybrid technology as well as plug-in hybrid technology. So we can modulate, if you will, our models into each of those markets. And then we're going to see this big shift to technology beyond electrification. So that software, silicon, connectivity, and data, that's going to become a lot more profound in the products 25 and beyond. So that's how I see 2025 shaping up. It's going to be a tough year for the industry, but I think we're reasonably well positioned.
Jim, do you want to just go to the elephant in the room, which is trade wars, concerns about bringing in parts and vehicles from Mexico and from Canada as well? Just tell us how you're positioned stateside.
Yeah, so 24, we saw that play out for really in the first phase, which was the increase of tariffs for EV cars coming from China into the European Union. So that went from roughly 10% to 30%. So we've had to absorb that, and we're actually relocating production from China into our Belgian facility to help navigate through that. The next wave, if you will, looks like that's going to be focused in on the US. We've already saw some movements in terms of Canada and Mexico. And also last year, we saw batteries increase from 7.5% to 25% when you import them to the USA if they're originating from outside the USA from a country without a free trade agreement. So we're going to see more of that. We need to wait to see how it plays out, of course, but we're preparing ourselves to see whether we need to start looking at production, relocation, or even supplier relocation to different parts of the world. So it's going to be turbulent. As I say, that's going to be part of the challenge for 25.
Jim, let me tackle pricing with you because you've made some comments this morning about increased discounting. I know in the Chinese market that Tesla has had to launch its biggest discounted package for mid-range EVs so far this year. But what are you seeing more broadly? Is it China discounts we're talking about here, discounts in Western markets? What are you expecting this year on EVs?
Yeah, it really bifurcates because if you look at China, the discount is focused mainly on the entry, the mass market EVs. That's where you see most of the discount. We don't really play in that sector. We sell mainly mild hybrids and plug-in electric hybrids in China, and we play in the premium side. So we don't get anywhere near as affected as some of our competitors do within the China market. That said, I think we'll start to see maybe in 2025 some additional discounts that may start to encroach on the premium market as well. As some of the Western brands lose market share in China, then of course they're going to retrench into their domestic markets and the other global markets and try and pick up market share there in order to keep the revenue streams at the same level. So I think it starts into the hyper competitiveness and the price indiscipline, let's call it, starts in China, but I do think that will permeate through Europe and into North America as well through 2025.